Let's jump right into this explainer. Did you know that a whopping 82% of businesses go under, not because nobody wants what they're selling, but simply because of poor cash flow management? It's wild. If you've ever felt completely overwhelmed by the numbers, or if you just want to sharpen your financial intuition so you don't become part of that statistic, you are in the exact right place. We're going to break down the complexities of corporate finance into simple, visual, and highly actionable pieces.
Here's the roadmap for today. Making versus managing money, revenue, profit, and cash, reading the financial scoreboard, and finally, planning for the future. We're taking you from zero to confidently controlling your business's financial health. All right, part one, making versus managing money, the illusion of success.
Okay, imagine this for a second. Your business is pulling in 10 grand every single month. Sounds pretty fantastic, right? But then the end of the month rolls around, you check the bank account, and there's basically nothing left. You made the sales, the customers are thrilled, but the money has just vanished. It's super frustrating, but it happens all the time. So you're sitting there asking, where on earth did that 10 grand go? Well, this is where making money and actually managing money reveal themselves to be two completely different beasts. It's like a leaky bucket, really. You bring the money in, but it just bleeds right back out. You've got salaries for your hardworking team, rent for the workspace, supplier invoices, marketing campaigns, and, the tax man is definitely taking his cut.
And that right there is what business finance is all about. It's simply the process of tracking where your money comes from and exactly where it goes, so your business can actually survive and grow. It's not just boring accounting stuff. It's literally your company's survival mechanism. Earning, spending, surviving. And the best part? You absolutely don't need to be an accountant to get a handle on this. You just need to grasp how the flow works.
Moving right along to part two, revenue, profit, and cash. Let's follow the money.
Let's clear up a few terms that get mixed up all the time. Revenue versus profit. Revenue is your top-line number, the total cash generated from your sales. It's everything coming in. But profit? Profit is your reality check. It's what actually stays in your pocket after every single expense is paid. There's an old business saying, revenue is vanity, profit is sanity, and it hits the nail right on the head.
To put that into perspective, let's think about a local coffee shop. Say you generate $20,000 selling lattes and pastries. Great, that's your revenue. But you had to spend 15 grand on coffee beans, paying your baristas, rent, local ads, the whole shebang. So your actual profit? Just $5,000. And honestly, that's before any surprise repairs or final tax bills show up.
Now, this brings us to a really dangerous trap called the cash gap. This right here explains why a business can be highly profitable on paper and still completely fail. Say you make a massive $10,000 sale on day one. Awesome. But the client says they're going to pay you in 60 days. Meanwhile, on day 30, your rent, salaries, and suppliers are all demanding payment. You've got the profit on paper, but zero cash in the bank to pay today's bills. You are officially in a cash trap.
And that's exactly why cash flow is the true heartbeat of your business. Cash flow isn't some theoretical profit. It's the literal, physical movement of money in and out over time. It's all about timing. You've got to manage the exact moment money arrives against the exact moment it needs to leave. If you aren't timing those inflows to beat the outflows, well, the business stops breathing.
Okay, part three, reading the financial scoreboard, your three major tools.
To actually track all this movement, you need your diagnostic toolkit, the three major financial statements. First up, the profit and loss statement, which tracks your earnings and expenses over time. Second, the balance sheet, which takes a snapshot of your overall health at one specific moment. And third, the cash flow statement, which, like we just talked about, tracks those actual dollars moving. Together, they give you the complete picture.
Let's zoom in on that balance sheet for a second. It's essentially a giant balancing act between your assets and your liabilities. Assets are the things you own, your cash, equipment, inventory. Liabilities are what you owe, like loans and unpaid bills. Your whole job here is to constantly weigh these two sides against each other so things don't tip into the red. But to actually steer the ship instead of just looking at the wake, you need a budget. When you budget, you have to split your costs. You've got fixed costs, like rent, which stays exactly the same whether you sell one item or a million. Then you've got variable costs, like materials and shipping, which change directly with every single sale. Grouping them like this keeps you from getting hit with nasty surprises.
Which leads us straight into part 4, planning for the future, controlling growth and capital.
Once you've got your scoreboard and budget dialed in, you can strategically plan. And a brilliant concept here is the break-even point. This is that magic moment where your total revenue perfectly matches your total costs. You aren't making a profit yet, but you're finally not losing money either. If your fixed costs are $5,000 a month, you need to know exactly how many sales it takes to hit $5,000 before you see a single dime of profit. It's your survival baseline, and knowing it completely eliminates all that target setting guesswork.
Now, as you blow past that baseline and start growing, you're going to quickly hit a need for working capital. This is the everyday cash for buying inventory, paying the team, keeping the lights on while you wait for customer payments. And here's a crazy reality check. Growing too fast without the cash to back up those daily needs is incredibly dangerous. It's literally called growing to death. Growth is amazing for sure, but controlled, well-funded growth is what actually keeps you alive.
Sometimes you just need outside cash to fuel that growth. When you hit that crossroads, you're basically weighing debt versus equity. Do you want to take on debt, borrowing money that you have to pay back with interest every month? Or do you go for equity, getting cash right now but giving up a slice of ownership in your company? There's no magic right answer here. It totally depends on your goals, your risk appetite, and where your finances are at today.
The best operators out there don't just stare at today's numbers. They're constantly looking around the corner. They use financial forecasting to ask the tough what-if questions. What if sales drop 20%? What if raw material costs suddenly spike overnight? What if we open a second location next year? Asking these questions lets you prepare your playbook long before a crisis or, hey, a massive opportunity ever hits.
But look, none of this works without straight-up financial discipline. It's a habit. It means reviewing your numbers routinely, tracking that cash gap, comparing your actuals to your budget, and please, definitely keep your personal and business bank accounts totally separate. Doing all this is what lets you make confident decisions instead of just crossing your fingers and guessing.
At the end of the day, our source material drives home a really powerful point. Business finance is not just about math. It's about taking absolute control of your destiny. Understand the numbers, control the money, build the future. Get a grip on revenue, profit, cash flow, and budgeting, and you've got an unbreakable foundation for real business success.
So as you look at your own operations, or even just the businesses you interact with every single day, I want to leave you with this one critical question to chew on. What are your numbers telling you today? Take a really close look. You might be surprised by what you find. Thanks for joining me on this explainer. Keep learning, keep analyzing, and I'll catch you next time.